Hello everyone. So I was sharing a few charts. This was one of them. I was mentioning how we would be buying the dips at the lows. We would have a bounce back to 505, and we hit it today. So now this 505, 507 area is very, very important. And in today's video, I'm going to explain what the next steps are for the market, how much more room we have to go to the upside, what needs to happen, all that good stuff. All right, so without further ado, let's get started with the video. First and foremost, the driving factor for the market is going to be earnings and FOMC statement coming in next week. So this week, as well as next week, all of the large tech stocks and large companies in general are going to be reporting earnings. And then to top it all off, we have FOMC statement and the conference May 1st, Wednesday. So there's a lot of interesting things that are about to occur over this next week. So this is something that we really have to take into consideration. What ended up happening in March was after FOMC, we ended up pulling back. So now with this meeting, it's going to be very interesting to see if they change their tune, how they respond, how they speak in general, and how Powell is going to comment on what's going on in the market. Based on what he says, we might potentially get a bottom and a rip afterward. But that's something to take into consideration. So now, based off this chart, we were buying the dips, right? I was very bullish. I was waiting for more room to the downside. I still personally think that we should be falling a bit lower, because if the market is bearish, these are great opportunities to add to shorts. These two zones, great opportunities to add to shorts. And to get a cleaner number, you get the fib level from the highs to the lows, and you look for the 38.2% fib and the 50% fib. Where did we bounce to exactly? This is the 38.2% fib from the lows, and we hit that level exactly. Right above that is the 50% fib. So this area is essentially where bears want to start adding into puts if they want to short, right? Because for a bear flag to continue, it cannot really break above the 6.8% fib. Usually if it breaks above the 6.8% fib, then it's not a bear flag anymore. We usually tend to see some bullishness. But if it can remain below the 50, then the bearish momentum is still there. And that is currently still on the table. Up here, I'm not looking to add to longs, but I am also not looking to add to shorts, because this has been a ridiculously strong market over the past few months, obviously, right? And I don't want to start adding into shorts, because even I could be wrong. I could be wrong about how much further we drop lower. But so just very simply, when you take how much percentage has we dropped so far? We dropped about 6%. Do I think that this is enough? No. I would love for it to fall a bit lower, but I could be incorrect about how much lower we fall. So for that reason, so say for example, like up here, right? Oh, wow, okay, I think the SPY is going to hit 480 now. Instead of me adding into shorts, that is not a high quality trade, because we can continue rising and just continue breaking above levels of resistance. Nothing stops us from that. But for us to go long here is a terrible trade. For us to start leaning bullish here is a worse trade, in my opinion, than beginning to add to shorts, because it's just a terrible trade. So I'm going to say it again. For us to start leaning bullish up here after bounces, it is probably the worst time to start going long. And it's worse than trying to short. So I hope this makes sense. So yeah, so to get a further gauge of the next steps on the market, we need to look at what the large tech stocks are doing. We saw a lot of strength out of these large tech stocks, which is primarily the reason why we saw this bounce. And it was because of these overextended to the downside, large trillion-dollar companies that caused the market to bounce like this. So let's go ahead and take a look at that. Microsoft, daily chart of Microsoft, bounced aggressively. We're coming to a level of resistance here around 410. But we were very overextended, bounced aggressively. Netflix, we overextended to the downside based off of earnings, but this bounced aggressively. Google was already showing strength, continued showing some strength. Amazon was already not that overextended, but this bounced aggressively as well. Apple, bottoming out a bit, starting to show a bit of a bottom, but this bounced. The rest of the tech stocks as well, NVIDIA overextended, AMD overextended. All of these stocks ended up bouncing. Now, the question is, how much further can these guys go? How much further can these little suckers bounce? That is the question. So now, to really, really determine that, we don't know. We have no idea how much further these stocks are going to bounce. But we knew that they would. Which is why trying to go long into this strength is a terrible trade. I hope this makes sense. So, once again, when you are trying to catch market reversals, when the market is falling, when you're trying to catch reversals, simply just go long at levels of support into weakness. Don't go long into strength, because these pops to the upside can be bull traps. These are amazing opportunities for us to continue falling lower. And just be very, very careful. This is really not the time to start going long, in my opinion. But so far, so good. Things were occurring the way that they needed. In terms of this, we bounced off of this last long entry really, really perfectly. And you can see that, my level hit perfectly. And if you just simply trade into weakness, I had these levels drawn out as we were falling lower. So I had these levels, I drew these out. I think I drew this out before we even made this candle, I think. I'm not sure. But definitely we were nowhere near any of these levels here. So simply found perfect levels that, because we were short on the market. We were short on the market up here. We were shorting the market all throughout here. So simply, where would I like to take profit on my puts, on my shorts? And we took profit, and it just so happened that was alongside the third long entry that I mentioned, and it ended up bouncing. And we ended up also going long after taking profits on the puts. So the trades are working out really, really well. Personally, I would love for this to break down even lower. We started taking profits on our calls. Personally, I want this to fall down even lower. I want bulls to be very, very stressed out and anxious. We haven't gotten that yet. I still think we need some more weakness. But I'm going to be a buyer. At all of these levels to the downside, I'm going to be a buyer. So I hope this makes sense. Yeah, man. The proof's in the pudding. Definitely was not a time to go short. It was the time to long into this weakness. But now that we're showing strength, neither is it a time to go long, nor is it a time to go short. So I hope you guys enjoyed. If you guys want access to my trades, if you guys want access to me throughout the day, if you guys want to be a part of the group, you want access to my indicator, by all means, go ahead and click the link in my bio. You'll gain access to all that stuff. I hope you guys have a wonderful rest of your day. Hopefully, these videos are helping you guys stay on the right side of the market. So, hope you guys have a wonderful rest of your day. Take care. Have a good one. Love you guys.